Hello, today we'll talk about yesterday's FOMC. See, as you can see here, we had Thursday midnight at 12:30 a.m. we had FOMC, which converts to 1:30 p.m. in Eastern Standard Time. Let's see what happened that day. On daily, I would like to draw your attention to these clean highs. These will draw a horizontal line here. Let's change the color. Black. Okay. Okay. Now we'll go to this is current day. The red bodied day is the current day, and this green colored one is the previous day that we need to study. It's Wednesday, yeah. Let's go to 1 hour time frame and see what happened. If you notice, price made this clean highs again here. If you zoom out a bit, then you will see this is the range of price from here to here. This is the range, and price was hovering around the equilibrium of the range that it was in. Here we were talking about during this time. This was the time before FOMC started, and as you can see, it was hovering around this equilibrium. Now you would ask, why did I take it from here? This could be considered as a swing low, as the other two candles are wicking above it. Their wicks are not closing beyond this main wick, this big wick, and anything below this, it seems balanced and repriced, because this is the mitigation block that it tapped, and it then gives a move upward. If you zoom it in, and even when you go on lower time frame, you'll see this better, but uh, as of now, let's see it on 1 hour time frame too. You will see how, let me draw it. This is a swing low which got taken out by this another swing low, and this is a breaker block. So if you draw out this green candles high, that's where the price taps again in the future and gives a nice rally upward. This confirms that this is a breaker block, and that's why we have drawn this line saying it's a breaker. And on lower time frame, you will find one more green candle. We'll talk about it. Let's go to a lower time frame. But before that, this is what's happening on 1 hour. Uh, Let me remove this. Sorry, what did I remove it? Yeah, I want to remove this. While we are here in 1 hour, we also want to mark all the POIs that we are able to see. These volume imbalances are the same thing. These are the gaps which are already delineated with these purple candles. So we don't need to mark those. We already have those marked. We'll mark this inversion fair value gap. We'll extend it ahead and then there is this dark colored fair value gap again here. Okay, these are the two POIs that we have marked besides the breaker and the clean highs. Alright, now remember that we are hovering around the equilibrium, so price could go either way. Let's go to 15 minute. You'll be able to see this breaker clearly here. See, this is the swing low which got taken out later, and then these are the two green candles which we are considering as a breaker block, and we are extending them ahead. Anything beyond this, anything before this, we can consider it balanced, and we can also, as a result of that, we can also start our swing uh, range from the breaker block itself. That means we can, if we were to draw a premium and discount zone, we can draw it like this from the breaker to the clean highs, and that way we can say that okay, the price is still around equilibrium. Look here near this arrow. This was a time that we were trading in the market. I wasn't trading technically, but this is the time that we ought to study, and that's where we can find that we are at the equilibrium. One more important thing is this also becomes a CISD. As soon as market closes or even paces beyond these two green candles, it switches into a buy model. It switches into buying higher prices, and none of the candles later feel the need to close their body beyond these two order block candles, these two CISD candles. So if we go with the CISD plus OTE model, then we can extend our OTE from this breaker block to the clean highs, and let's do OTE, and there you go. You see how the price has correctly taken the support off of the OTE levels, and then it went ahead, then it went up ahead. We'll talk about this wick and how I also anticipated that price would come near the breaker, and we are going to talk about it. So let's first get rid of it. I discussed about the breaker. Now we'll discuss about how the price has behaved for this day around the opening. Let's go to a lower time frame. We are now on 1 minute time frame. This is 7 a.m. Pre-market starts here. And let's mark the 9:30 opening. We don't need to mark it. We'll turn on an indicator with which we can directly get it on the charts. So this is the opening candle. So before the opening, during the pre-market session, price has mainly went lower, and the moves were also lethargic, which is justified because we had FOMC the next thing. At the very beginning of our 9:30 opening bell, we have this what what do we call this? There's this word whipsaw, both up and down, and then price went towards a stable downside move. Now here what I'd like to do is I'd like to turn on an indicator which marks opening range gap for me. There you go. This was the opening range gap for the day, and as you can see, the price has successfully filled it in. So if we start observing the price from the very beginning of 9:30, you'll see that there was no good displacement except for this one fair value gap, which can be considered as a first presented fair value gap, but that still did not get respected. And this is how you can say price behaves around or before FOMC, how it's not respecting the POIs. But then later, all the smaller POIs like this fair value gap here, this becomes an institutional order flow entry drill, and it was successful in doing that. After this, this was the this was also the time of silver bullet. After this is 10 a.m. So immediately after 10 a.m. you got this entry. Uh, Next up, the price also comes back again into this. You see these two purple lines. These were that day's uh, new day opening gap, and as you can see, price comes back again into the mean threshold of this new day opening gap. You can also use the concept of CISD here, where you can consider these as order blocks, and then this one also becomes uh, a propulsion block, because this order block is inside these order blocks. So if you extend this order blocks low up ahead, then you will find a proper entry around that level, which also pushes the price ahead. Let's delineate that. This is OB. Now anything about the CISD, we consider it balanced. So if we were to use our OTE, which would be from this OB level to this swing low, then you will find a good retracement to it till the OTE levels and also the new week opening gap, and hence that becomes another entry here or even here. After entering here, you could have targeted your opening range gap's mean threshold. Price successfully went beyond it. Why did it do that? Because we had these once you see these two purple horizontal rays, they are also some previous new day opening gaps, and since we had those below, that's why we could have confidently held to that price was supposed to go there, and it did. After that, it meanders around these levels because we are getting closer to the FOMC. Wait. What was the time? It was, yes, 12:30 a.m. 12:30, which is 2 p.m. as per Eastern Standard Time. So, wait. Something's wrong with my application. Okay, we got it back. So 2 p.m. we had our news driver, FOMC, here. Now, as per Michael, you might know that FOMC delivery is done in two stages, where one is a fake move and the other one is a real move. Now, all this time before the news, or even while the news, you can see the short-term highs were taken out. This one, this one, this one, and even this one. Immediately at the news too, and also after the news as well. It went up into this fair value gap. It was trading in this inversion fair value gap too. So what this tells us is that price is trying to establish a notion that it has a support level or a trend line below these lows, because it kept taking the short-term highs, and that itself could tell us that it is a manipulated move. That is the move that is being shown to us as the fake move. So that was my notion here. Plus we had already completed a lot of stuff up here because we had equal clean highs. We also had the on the daily time frame I showed you the equal highs. Then we had this order block and this constant rally down without much of an imbalance in them. So all this cleared it to us that okay, price has some intention to go down, because it has completed what it had to do up there. And during the news, during the news, like after 2 p.m. or even before that, it started taking the short-term highs, showing us that it wants to go in one direction, that is up. But we know that the very first thing that it does during an FOMC is a manipulation. First move and the first stage of the delivery in FOMC is always manipulation. You can also see here post 9:30 there was no good fair value gap formed, but then here you can find this one fair value gap, which is also overlapping with the opening range gap quadrant level. We extend that forward, and in there you'll find price at let's turn on macros. In a macro you will find this is New York's last hour. See how the price is reaching into this only left inefficiency, and then it gives a very nice move down till the breaker which we had already marked. Now if you see closely, you will find these two green candles as the order block. Why we aren't considering this is because its body is lower than this one's. That's why we can consider these two as CISD candles. We'll extend them out. Right, this is CISD. And the swing low is here, this wick, from here to here. We'll draw an OTE and you'll find how price is, I guess not this one, but which OTE did I draw? I think I drew this one earlier. I think I drew this OTE and said that it retraced till the OTE level. But yeah, you can use the CISD way as well. Price went up into it and then give a nice fall till the breaker. One more thing that I forgot to mention was, let me remove the indicator. Yeah. If you see this breaker region, you'll see how we had a consolidation here first, and then price manipulated downward and then gave an expansion. So observe closely. Isn't this the market maker sell model where this is expansion, then this is accumulation, second expansion, accumulation, third expansion? And because of this, we can say that we could expect another downfall here. You can also make it from this region as well. Here we also had a big consolidation here. So consolidation, expansion, retracement or reaccumulation, and then expansion again, second expansion. After that we had it reversed, we had it make a market structure shift, and then it went below the initial consolidation as per what we had expected. That's why we extended this breaker block. So this was it for that day, and after that price went upward because on the higher time frame, as we had already studied, it had come to an OTE level somewhere here, and that's why that could be the reason why next it is going up.